You're alive. Good morning, everybody. 3 minutes late, and my daily plan isn't written. I don't have my levels in there. Not sure how the time escaped, but it did. Be that as it may, here we are. So, quick recap of where we are and, more importantly, where we might be heading. And so, quick recap of the week. After a little bit of weakness earlier in the week, numbers came in, everybody was happy. CPI, PPI, LMNOP, all the numbers, the whole alphabet soup was good by the algos. It's not my job to decide if it should be or shouldn't be. Additionally, on the earnings front, we had Oracle and we had some software names reporting good numbers that helped with the whole AI tech trade. Uh, we had a little rotation back into big tech, and IWM went down for a little bit. Let's get a IWM up, for example. IWM had some weakness, which was a buying opportunity. I took advantage of. OMG, what the hell? That's probably not a good. That's probably not a good look, is it? That's probably not a good way to do that. Let's fix that. Okay. IWM had some weakness and took advantage of that. Now, yesterday was the opposite. Yesterday, RSP equal weight outperformed SPX, standard rotation, standard chorus of people saying breadth is too narrow, we're going to go down. Standard chorus of people probably saying, oh, breadth is good, we're going to go up, which means we may not. And that's that. Good morning, Rick. Okay, and so where are we now? A scotch away from 6,600, and I've kind of been pointing this out. Let's go over here. So when we look at depth view and options depth, and look at where market makers are long and short, green is where they're long, where we get stuck or get pulled to. Red is where they're short, and the bigger the number, the more positions there. We have been seeing 6,600 for weeks up here for September options expiration. Since August, people thought they were crazy. I thought it was a little crazy too. Well, guess what? Not so crazy after all. Crazy like a fox. And some stuff at 65.90. But let's not get it twisted. Well, these weren't here before. These are kind of new. The 65.50s. So customers are long puts right near the money. Not surprising. And this is now we're looking for next week. Okay. So getting back to what's happening now. So we're roughly here 65, 80, 85, more or less down a little bit from the close at 87. So we're here. Nice place to be because it's an inflection zone. So we're kind of stuck in this sticky gamma area. Remember, if we go up, they sell. But when you move away, then they have to buy again. Not as exaggerated sharply as time passes, that effect is stronger and stronger, which is why we pulled towards 65.90 yesterday. That big long market maker strike just got stickier and stickier as time passed and theta kicked in, and so they're getting shorter and longer at a faster rate compared to their deltas as time passes. I know I talk fast because I think fast. You have to listen fast. Listen fast. Okay. And I talk fast because I think fast is a line from Pulp Fiction. For extra credit, which character said it, and for extra credit in what scene? I'm waiting for your answers. Okay. So below 65.80, if we could get stuck here, 65.80, kind of pull back 75. There's basically nothing here. Okay, thank you for reposting the stream. I'm not sure how you do that, but that's cool. Oh, probably on Twitter, yeah. Drunken Sailor, upper 65.85. So what happens over the 85? Okay, so I have we'll call it chop zone. I kind of made it a little different area, but let's dialogue briefly. So I see below 85 or below 80, we'll call it, down to 60, we can call it chop. We can call it chop. Up on top, yeah, it's the local peak. See, when I'm looking at it, we have this sticky area here, 80 to 90. Call it chop. I don't know what you want to call it. And we have a possible inflection at 95, and then we're getting a bridge too far up here where all these calls would be suppressive. So it's hard for me to see it getting past maybe an overcut to 66.05 and get slammed back down to 95. I just see a tight day. If the range was about 20 points when I checked the expected move, and we were at about 80. So that gives me 60 bottom and 6,600 top. And that seems about right. That seems about right. Maybe an overshoot on top on the bottom. Suppressive, unless we see interest. Yes, I totally agree. And I was going to point that out, so I'm glad you did. And the way I like to say that to myself and to people who look at it or think of it that way, and that's basically Mr. Wolf cleaning up the scene. That's right. Extra credit. Did you Google that or use AI? The way I think of it, and you guys have Vol D and Vol M, which I remember when we first came up with that. When you first came up with it, well, I kind of pushed you a little bit. Well, and I have other ways of looking at it now. If I connect it to Gamma Edge, I'll look at it there. It's a great tool. It's just I'm all over the place. If we start seeing buyers come in, say at 6,600, it's 2,500 contracts. It's not a ton. It's not a ton. We can have a big buyer of 500, 1,000 contracts up near here or at 95, making this overwhelm this. We can not easily, we can chew through this. Similarly, if we have put buyers come in or call sellers start coming in up here, 65.75 is 750 contracts. There's nothing there. So depending what comes in early in the day, and remember, early in the day, let's just say hypothetically, 65.50 convexity people or 65.60 people that are spotting that kind of start to buy puts, whoosh, that goes away. We can get like a down goes Frazier, looking a little scary, maybe a 5 or 10 point, 12-point acceleration bar into here, undercut, and reclaim as vol sellers are probably going to come in right down around 40. I know how my people think. They're going to come right in down here. We're going to see an initial 7,000 contract iron condor like we've been seeing lately. And then by 10:30, 10 o'clock, we're going to see 15, 20,000 somewhere in this area, probably. Your crystal ball is as good as mine, as people like to say. And then that'll set the edges for the day, which can get eaten through. So 90 was an edge set yesterday by these people, and it almost got eaten through, but it was big enough that we got that mean reverting chop. We kind of went toward 90, and they had to sell, but late in the day, as soon as we move away a few points, because of charm and theta, now they're too short and they have to buy, and we stick a few points away from it, which is kind of what happened. And so might that happen today at one of these levels at 6,600 or whatever? Now the other thing, it's a Thursday, it's a Friday, And vol on for Monday just tends not to get bought. And if we look real quick at the chain, ignore my Frankenstein flies. I got this is like my play. You can't. If we look at the chain for Monday, actually that's not 11. I wouldn't be surprised to see this number down sub 10 to be to not even be a preteen by the end of the day. Now and then typically on Monday this number reflates. Oh, and next week I didn't write about it in my note yet, and I'm probably not gonna because I'm late. But next week we have we don't have much going on next week. We only have VIX options expiration on Wednesday, along with the FOMC. We have a double header on Wednesday, and then of course we have the SPX AM options expiration. Of course, like the clickbait people like to say, it's the biggest expiration in the history of the humankind since the cavemen. And yeah, every expiration is going to be bigger notional because the value of the index is higher. And when they do those hyperbolic amounts expiring notional, they're counting, here, let me pull up Gamma Edge because I like Gamma Edge because you can just kind of see as wide as you want with a couple clicks. So come on, I always use them to look at VIX. That's my default go-to for VIX. And we'll look at VIX while we're at it, then we'll shift gears back the other way. 15.5, 300,000 puts. I'm gonna assume that they're long puts, customer long, but doesn't really even matter because either way it's an inflection point. So do we stay buried? Come on, you can do it. You can do it. Do we stay buried under here? Probably don't get above 15.5. Maybe we could sneak our head up above 16, Monday, Tuesday. But Wednesday, all this goes away. Tuesday, end of the day trading. Wednesday is the SOQ, the special opening quote in the morning, which is always wonky because it's a crazy process. And we'll talk about that next week. And so then on Wednesday with the FOMC and expiration, then we probably go up to a 16 vol easy, maybe a 17 vol, and then the Fed lowers rates, and then we go up and down 25 points during the press conference, and then we see where we are on Thursday. And we see where we are on Thursday. And then Thursday, that's what I wanted to show you. Let me go back. Good morning, Boomer. Then on Thursday, let's just get the SPX AM. And this is a Gamma X special, having the AM expiration kind of parsed out. And so you see we have this big zone basically from where we are all the way down to, we'll call it 6,400. Total high 4 million. 4 million. The upper call zone where like we have all these crazy calls up at 6,700, we ain't getting there. We ain't getting there. And we have 17,000, statistically it's not a lot. We have 6,600 is clearly the line in the sand. On the bottom, I haven't really looked for 65, 63, which was real close. I saw another calculation where, grain of salt because of the way they calculate gamma flip and all that stuff, but 6440, somebody calculated, was where we get into put dominated. I guess Gamma Edge would say 6410. I might say whatever, but we don't want to see 6450 neighborhood. Things could get ugly, and 6450 is what? So let's just say we're 6600, right? So 6450 is 150 points. That's 2.5%. That's certainly doable. What's the expected move? I'm just kind of thinking out loud. Okay, I don't have the expected move chart here yet. This will populate at the open. But again, we can just look at the chain and see the expected move for next week is 81. So that's 1.5%, I guess. Not even. One and a 1.2%, something like that. So 80 points expected move would put us up at 6650 top where we have a magic line, and 80 points lower would put us at 6500 where we have lots of magic lines. Looking TA wise, the low on 6480 was the low on Tuesday. And we have another local low here at 6440. That's, I guess, somebody had a 6440 calculation, which from a kind of price action level, you sort of want to see hold. So I'll go with that. Good morning. And Gamma Edge probably left to go do their morning thing. So contrarian long 6540. This is a buddy of mine's secret sauce. That's based on VIX. That's Kill Pips. This is Kill Pips' toy. I haven't given him a shout out in a while. I should. And that's really it. I don't think much is going to happen. So let's go back to. Okay, wait. Now I gotta. Oh, Bad Hombre. I'm gonna put you up there, and I gotta
Hey, good
unshare for
morning,
a
guys.
second.
Can
So go
everybody hear me?
ahead. Yep.
Okay, great. Um, I set up here these values will be based off ES. Um, I'm curious to see if we can break above 595 ES. That one seems like it is going to be a little hard to crack. Um, but don't really want to go short until we break below 5584, 5580 really. So, um, could be a little bit of a ping pong day for me in terms of holding a trade or not. And I think going for quick little scalps is probably the way I'm going to approach today. If we break above at open 595, then I'm going to be long all day for the most part, and not
So
holding one trade, but looking for multiple longs.
so 595 at this stage of the game, it's about 5 point difference between SPX and ES. I think maybe even less.
Hmm.
So what was your number on ES?
595
Five
break
nine.
above. Yeah.
Okay, so 590 SPX. Okay, so the problem is from a GEX point of view is we got that 6600 round number sticky area. So I don't know how much extension you get past there, unless the buyers come in, unless all you guys come in and start buying that breakout.
Yeah, then it could get fun coming into Friday. So I think, but I am a little skeptical that it is a strong break above there. So I'll be patient.
Yeah, I mean,
Um,
I'm sorry for I'm just going to say my gut tells me that for scalpers, this is not going to be a great day. It's going to be a 3.5 point each way day, not really a range
agreed.
expansion day.
Agreed. Yeah. And then if for whatever reason we do break below 65.80, I'm not really trying to go much further than 65.75, 65.70 really.
And that again confluent with the and that totally makes sense. Let me just switch from the chart to let me just go back to option depth. And so your number was if we break below what?
65.80.
Okay, so 65.80, so that would be 65.75ish on SPX, where we have this void. So we have a market maker short gamma void about 10 or 15 points down, but we would expect to bounce before the 15, so you could maybe get 8 or 10 points down. Eight, 5, 8 would
Yeah,
be the easy trade, and it just depends on how stubborn you want to be.
agreed.
And I want to point out to people how there's confluence between the methods often, and when you get confluence, well, that just adds confidence and in statistics we used to call it something convergent validation. You get convergent validity from different statistical methods. That was actually in test construction. When you constructed psychological tests and you got convergent validity that your test was valid on a sample size, and that was also valid on clinical observation of patients, and also valid, say, on a pencil and paper test, and also valid on another measure. Different types of measures, convergent validity adds strength to your conclusion. Similarly, convergent validity of gamma and price action or depth of book or well, whatever you want to call it, MACD, Fibonacci, I don't care what you do. Convergent validity strengthens the case.
Yeah. And I think it's nice to know that there's logic behind my lines and boxes.
Okay, that's that
Yeah.
too. Right,
Yeah.
that somehow people are seeing the same lines and boxes and buying puts and calls or whatever around those lines and boxes.
Yeah. All right, guys. Well, I got to bounce in, but I'll see you guys in there. Good luck today.
Okay, good luck. Okay, so let's see what else is going on. Good morning, Danny. Okay, so now we want to go, we meaning me and anybody who I haven't lost yet. Okay, so I have this whole Frankenstein, whatever. I think I'm gonna cancel that for now. We'll leave this as a fly right here at 85. I should be able to get out of this fly profitable at some point today. And I have this whole big Frankenstein up here. Long one, short two, short one, short one, long two, long one. And I was built from pieces throughout the day. But to the downside, I like this area. 65.40, 35 even better if I could steal. Put one in there. Oh, okay, yeah. Go down there. Now, we were looking before the market opened at like a five wider. So let's go see 65.40, 35 as a quarter. That's not bad for a certain style of five wide. And say 20, that's 45 cents. Something like this would be okay for one style of five wide or, something like that. 15, I guess, we shouldn't go through there. So somewhere in here for a five wide, 15.20 or 20.25, or if you're content to just be a little further away from the action and get 40 cents, a decent percent return, like an 8% return on your margin. You could do it that way. Or if you want to do a more textbooky way, and I might put one in for fun this way too, a more textbooky way. Nah, that's not textbook either. Textbook, you'd have to go, textbook, you'd have to go way too close. You'd have to go, so textbook, looking for at least a quarter the width of the spread, you'd have to go like that, and you'd have to go like this. That would be a textbook trade, or even something like that. That would kind of be a textbook trade on a 5 wide, which is, a good chance it'd work. We're right outside the expected move. Textbook trade is you go, if you want to be a real cowboy, you go 20 delta at the expected move. If you want to be a little more rational, so to speak, you go at around a 16 delta or a little bit further away. You try and capture a quarter the width of the spread, a fifth the width of the spread, something like that, depending on your risk tolerance. Or you want to do a 10 wide, like that, doesn't look bad. I might do one of these for fun too, 65, 60, 65, 50, 40. And where would I go on top? I'd have to go 65, 15, 25, something like that, 15, 25. That wouldn't be a bad IC. Now I'm already long over here. I'm rather short there, but that wouldn't be a bad IC either. So something like that. As far as flies, we like to talk about flies. Good morning, Ivan the Terrible, Ivan the Wonderful. Good morning. Um, and you can tell us what you're seeing. I imagine we're looking at similar data. We're seeing it similar, only you're more of a scalper. So be curious to see what ranges you like for long or short. I see a pretty tight day. I see below this 80 is where we have a path downward towards 60-ish, depending, of course, on the buying and selling that can eat through these because these are small. On top, going to be hard to eat through 6,600, but it's a round number, and if people get enthusiastic, they can maybe go through up here, but I don't really see that happening either. I mean, it could. I'm just saying, kind of playing the odds, so to speak. And so, from a fly point of view, I like to look at, whoops, to get to see where the flies are. I just like to look at the shape. And so, there's one fly, say 80, 60. So 80, 70, 60 looks like a reasonable fly. Or if we want to buy where it's heading and sell where it's stopping, you could do like a wide one is 75, 50, 25. That would be expensive. Or you might want to, tighten it up 70, maybe a 70, 60, 50 fly, or fly down in there. On top, this 95 is your clear inflection point. So, I don't know, maybe not, it's shitty. You'd have to buy like a 95. You have to buy this 95, 20-ish and sell somewhere in the middle. So it would be 95, 95, 10, 25, or 95, 05, 15, something like that. What are you seeing, Ivan? Ivan is an analyst over at Trade with Insight TWI. He's a buddy of mine from Options Depth. We kind of traded side by side in the trenches on voice for a while. Good guy. A New Yorker, so you know how these New Yorkers are. They could be a tad like me. They could be a tad like me. Um, so I don't. Looks like I've already lost his attention. He's probably busy doing his thing at Trade with Insight. And Trade with Insight is a great service. I kind of just throw my daily plan in there and do a little stuff with them. They do great work scalping Nvidia and whatever. Like the hot stock du jour is usually like the Friday expiration or the expiration, the next one. They're in and out sometimes. They're short term scalp, but not crazy short term. Like could be 10 minutes to 2 3 hours, an hour or two, and they're really good. I just don't have the time to sit there and do it. That's the only thing why I don't. But if you want to sit there and scalp and make money, I would advise it. And maybe I'll talk with John about a referral link or something, or a group discount or something. But anyway, and that's that. And I'm going to sign off in a minute. Oh, Vol Signals, and I'll tweet it out. He's doing some kind of a class or something, Delta Options Basic thing next week somewhere. And so if you want to learn some Greek basics or brush up on them, always a good, always good to hear a market maker's point of view on how they look at the Greeks. All right, I got to finish my note, or otherwise there's going to be a revolution. All right, everybody. I'll probably be back for pinball at the end of the day. Yesterday I had a allergist appointment, so I didn't get to do pinball. And trade safe, range compression day, if you ask me. And we'll see, though. Could be irrational exuberance. It's hard. It's hard to say. That's why I'm going to see what the data says. Okay, Rick. See ya.